Welcome back to the Investing Markets and Money podcast. And this week we're talking about mining royalties companies. And on the show today we have Drew Clark, who's CEO of Summit Royalties, joining us from Canada. And we're going to be talking a little bit about royalty companies and specifically Summit Royalties as well. And in particular, its very fast path to success so far. So welcome to the show, Drew.
Thanks for having me. Glad to be here.
Very quickly, for those who aren't familiar with what a mining royalty company is, can you explain how this business model works for those who are just not familiar with this?
Well, okay. Very simply, royalties or streams, but we'll principally focus on royalties today, are passive interest in a mining property. There's no ongoing cost whatsoever, and whenever they produce a dollar, we get a sort of prescribed economic interest in it. We can use one for example. In our portfolio, we bought for 8 million US. We bought a royalty in Ontario. We get a 1% NSR for every dollar they make. We get a penny. And how the model works, though, is when you aggregate these royalties together, you get a passive vehicle that typically trades at a premium to what they would fetch in an individual process. And it's diversified, it's cash flowing, it's got a low overhead. It's by far the most beautiful part of the mining business to be a part of. And, you know, investors love the sector. I mean, it's gone from roughly $3 billion of cumulative market cap 20 years ago to it's got to be well over 150 today. So it's certainly a very powerful way to get exposure to metals and mining.
And how do these work in practice? I mean, are you acting like a bank? Are you lending money to the miner, or I mean, are you expecting to get the money back at the end of the day?
Yeah. So probably the easiest way to think of it is kind of like a bank. Once you acquire that contract, there's no ongoing costs, there's no hold costs, there's no nothing that you know causes you any cash outflows, and we just collect checks as they operate the mines. So, for example, last month we got paid for our monthly participation on a silver stream in Burkina Faso at the Orezone mines. So we kind of once you have the infrastructure set up, you just kind of collect checks. It's a beautiful business.
So you're basically like a very small, very lean company. It's not like you have to worry about any equipment or hundreds of employees or anything like that.
We are the benefit of the hard work that all of our operators do. You know, sinking shafts, drilling, putting out rigs, all of that hard work you hear guys talk about. We just sort of take a little off the top.
And can you give us a overview now of Summit Royalties itself, specifically?
Okay, so we just started trading on the TSX Venture under the symbol SUM just over 4 months ago. The company is very new. So a year ago this time is probably a good place to start, just to run everyone through how we built it. A year ago right now, we had roughly 50 grand in the bank account and no assets. Fast forward to today, with all of the deals that we've announced, we'll be over 50 royalties in the portfolio, and we're cash flow positive. But how we got there is probably indicative of sort of talking to about parts of the portfolio. We bought a royalty portfolio and one stream off of IAMGOLD in May of last year. Once we finished that, we did an RTO with another royalty company called Eagle Royalties. That's where we got a very exciting royalty on Banyan, along with 37 other royalties, and that was how we listed the company. While we were doing that RTO, we then did the aforementioned acquisition from Sprott, the Madsen royalty that's run by West Red Lake Gold. We took the company public November 10th, and on the back of that, we've now announced 2 acquisitions. One was on Newmont's Saddle North deposit, which we bought from a prospector for $5 million. And then on Monday of this week, on the 16th, we announced an acquisition of another royalty company called Star Royalties, which we're really excited about as well. So all told, we've gone from zero to, you know, next year we're expecting to do close to 15 million US in revenue. And just for your listeners' sort of knowledge, we're kind of around $120 million market cap today in US dollars. So the value proposition is fantastic.
So you really come from, I mean, I hate to say use the word, but from nowhere to actually quite a decent portfolio of royalties now. How have you been able to do that so quickly while staying disciplined?
Well, I think the discipline's an important thing you just highlighted there. Every time we transact, our net asset value per share and our cash flow per share goes higher. And that is the fundamental driver of any royalty business. But how we've done it is this isn't my first royalty company, so and I'm not here to talk about myself too much, but um, this is my third royalty company. I've either been in a corporate development chair but this is my first time as a CEO. So I've got a network and I guess a bit of a following in the space. We've got a really strong board of directors as well that help us sort of navigate sort of the capital raises that we've done and whatnot. And we love doing royalty deals and we're pretty good at it, I think.
So basically, not your first rodeo.
Not my first rodeo, yeah.
If we're looking at I mean, you mentioned already the portfolio of royalties you've got so far, and not, I mean, the new ones have only just been added in the last couple of weeks. But looking back at the others you've got, I mean, which are the assets that you see as the key cash flow drivers, and which would be the biggest growth catalysts?
So the portfolio is changing every day, particularly what we've done. I mean, it's Wednesday today. We've done 2 acquisitions since Thursday. But the fundamental sort of parts of the business, we'll talk about them very quickly. So we have a 1% royalty on Madsen. Madsen's a high-grade underground gold mine in Ontario, just declared commercial production in January. It's run by West Red Lake. That's one of our cash flow drivers today. We have the silver stream we also mentioned briefly earlier. That's run by a $2 billion company called Orezone in Burkina Faso. They've done a wonderful job there. We get 50% of the silver at no cost to us, and that settles monthly. So that's driving a lot of the revenue as well. And then we have a small royalty in Colombia run by Denarius Metals on Zancudo that's installing a mill later this year. So that's ramping up as well. Those are sort of those are the 3 cash flowing assets that we have today. And then this year we have an asset called Pitangui in Brazil that's going into development that's going to start producing next year. And we get $80 an ounce for the first 250,000 ounces, fully underwritten by reserve and mine plan there. So that's $20 million of total revenue. And that is a satellite deposit to their existing and operating mill there. They've been operating there for 20 years. So we're quite confident in them getting that up and running. So those 4 assets kind of make up the lion's share of that discussion. And then from a long dated standpoint, we have the Banyan royalty, where we have a 2% on the North Pit and a 1% on the western extensions of the Southern Pit. It is nearly 8 million ounces in Canada. And a lot of the high grade hits that they've been reporting in the market that have propelled their stock higher are all on our ground. That's going to come out with a new resource estimate next quarter. And then they're going to put out a PEA to the tune of over 300,000 ounces a year. So that is going to really drive some real fantastic economic interests. Those sort of make up the lion's share of what we had a week ago. What we've done since then is we've added another longer dated option on a asset called Saddle North. It's owned by Newmont, the world's largest gold company, and they have an operating mill at the Red Chris mine, call it 10 to 20 kilometers away. It is 9 million ounces of gold and almost 5 billion pounds, pounds of copper. And we got it at a fantastic price. What's also coming into the portfolio today, assuming that we transact with Star, which we announced on Monday, it still has to close, is we're buying a asset. The principal driver of the deal was an asset called Copperstone, which has a PFS coming out next month, most likely a funding decision and a build decision, and that's going to go into production next year. So we've got 2 mines with 2 very motivated, well-capitalized, permitted projects going into production next year. That's really going to drive our gold equivalent ounce growth next year. There's other assets in the portfolio that I love to talk about, but I think we're not going to talk about 50 assets today. I think we'd be here too long.
Well, I mean, looking at Saddle North itself, I mean, what made that really attractive to you? How does that reflect what you're looking for in a project?
Well, let's just talk about the numbers here. There's been previous reports of an underground block cave going there. When this goes into production, we think we get our money back in 1 year, and this will be a 25-year mine life. So someone likened this that it's very much so a Franco deal. You don't know when it's going to start, but you get your money back in a hurry. But on a price to NAV basis, it was wildly accretive for our shareholders. And we love buying, big projects with big operators. I think especially in the copper space, counterparties are very important. So that's why we did the deal. We simply couldn't turn it down. Once we negotiated a good price on it, we had to close it. And just for, we're trading at $1.50 today. We paid all shares for that transaction at over $1.70. So not only was it accretive on a portfolio construction standpoint, it was accretive in terms of how we diluted our existing shareholders at higher prices.
Oh, that's great. And Star Royalties, I mean, that, would you say, I mean, obviously hasn't been concluded yet, but that looks like a bit of a game changer in terms of scale and cash flow as well for you guys.
It certainly is. So we have our long stated goal is to get to 10 million in revenue as quickly as we could. Our portfolio ahead of time had the opportunity to definitely generate that much, but now we're looking at a 15 to 20 million a year run rate once all these assets turn on. And what's the next goal? Is it 30? Is it 40? I don't know. But the cash flow per share growth as a royalty company is a key metric that everyone, including myself, focuses on.
And as you continue to expand, I mean, what sort of projects are you looking for going forward, in terms of sort of scale, the type of mine you're looking at, and also, I guess, geographical criteria as well?
So I can't talk about, maybe we can use the existing portfolio as an indicator of what we're looking at. We would love to do another IAMGOLD style transaction. And I'll explain to you why we think we can do that. Large mining companies today have the best balance sheets ever, and they have these royalty portfolios in them. They are not looking for cash. We can pay cash, so that's not a problem. But to help us grow and have that multiple come up with them is something that has been tried and tested. That it's not a thesis of ours. It worked with a company called Mavericks. It worked with my old company, Metalla. Elemental has had some success with them. They've vended a portfolio in from South 32. So we're looking for acquisitions like that. We're also looking for cash flowing deals, near-term production. We like to transact in areas where there's a defined timeline to production, not a we hope it gets built this cycle. Typically, you can find these, we hope it gets built this cycle type opportunities, but the risk reward isn't there for us. So we're open to anything at the long and short of it. We're open to acquisition financing. We're open to buying some more third-party royalties. We're not married to one sort of way of transacting. Your question from a jurisdictional standpoint is pointed as well. We like to transact where there's a good rule of law and a bit of a mining culture. We do look at less favorable jurisdictions, but in my experience at both Metalla and at Summit now, where I worked before, the risk reward for some of these less savory jurisdictions just doesn't work for me. These things are priced like it's in Quebec or Nevada. And so we haven't done much in that place. And jurisdiction is an important factor. I mean, we'll be over, including Brazil, about 80% of our net asset value will be tied in tier one jurisdictions. So that's really a focus. And look, if I can keep finding high grade gold mines in my home province here in Ontario, there's no reason to go out and try and learn new jurisdictions as well. But we're not against, operating in other parts of the world at all.
Understood. I mean, just on the topic of gold mining, the gold and silver, the precious metals markets, copper market. I mean, these all seem very bullish at the moment. I mean, from your perspective as a royalty company, and you mentioned the cycle as well. Are you still feeling pretty positive about the precious metal sector over the next 12 months?
So we're dominated by precious metals right now. We have a pretty positive view towards copper. I guess, the Newmont acquisition would be, the acquisition of the Newmont royalty rather would be our first foray into copper. But we're going to stay fairly disciplined on the precious metal side of things. If we do something in the copper space, and this is my personal view and it's shared with the board, is counterparty is very important. There's not a lot of very successful small copper miners out there. So, Newmont, for example, is a $100 billion company. They have no problem funding and they have the technical team. But we are going to stay, pretty squarely focused on gold and silver. Right now, about half of our revenue comes from silver. That'll change as some of these assets we talked about earlier will ramp up. But that's where our institutional knowledge is. That's where we get a lot of our flow from a deal perspective. But no, we won't be. I guess it's more instructive as to where we won't go. We will not do uranium. We will not do lithium. We will not do any sort of the less sort of mainstream metals.
Understood. And from the perspective of a successful royalty company, how important is having a good network and having your finger on the pulse on what's going on within the mining community?
I think it's paramount, really. At the end of the day, having access to good deals, having access to good investors to help fund those things is really what helps drive the business. The model itself needs to be, implemented in a successful manner like we have. But at the end of the day, finding deals and finding investors is part of my day-to-day job for sure. But on the board, we have an unbelievable team of guys that all have built billion-dollar companies. And I kind of look at them as mini corporate development professionals that kind of work with us. So it really is key.
And just going forward, looking ahead, obviously you can't go into a lot of detail, but what should investors expect from Summit Royalties from between now really and the end of next year?
Well, let's talk on the corporate side. We had research launch on us on Thursday. There's some other investment banks coming out. It's great to have that sort of third-party validation. We've been trading for 4 months. We've been very busy on some of these transactions, so we really need to get out and market more. Quite frankly, not a lot of people know about who Summit is and the value proposition of our stock. So we're going to push on those initiatives, get the liquidity up, stuff that we can do as a management team. But on the acquisition front, we are, if you look at what we've built in just 1 year, we're not going to slow down. We're going to keep doing accretive deals. I think people should expect this is not a team that's going to sit back and rest on its laurels and wait for the money to come in. We only have 2 full-time employees of the business, so it's a very tight team, and we keep our G&A low, and that's another key focus of ours. So we expect 2026 and 2027 to continue to be busy.
Oh, that's fantastic. No, I have to say I'm a big fan of the royalty model. I think it's a great way for investors to get that lower risk, diverse exposure to the mining sector.
Yeah, no, it's a fantastic model. And look, I sometimes when I talk to new investors, I say, if I can't convince you to buy Summit, that's fine, but you should own a royalty company as part of your sort of precious metals exposure. It's by far the most superior way to get exposure to precious metals and other metals as well. I mean, this doesn't just work in my sort of silo of precious metals and copper. It also works in uranium. It also works in lithium. It's a tried and tested method.
Well, thank you very much indeed for coming on the podcast today. That's been really interesting, Drew.
All right. Well, thank you for having me.
The content of this podcast is for information and entertainment purposes only and does not constitute financial advice. The views and opinions expressed by guests or hosts are their own and do not necessarily reflect those of the armchair trader. Investments can go up and down in value, and you may not get back the amount you originally invested. Past performance is not a reliable indicator of future results. We do not provide any personal investment, tax, or legal advice. Always do your own research or seek independent professional advice before making any financial decisions. The Armchair Trader is a media company and is not authorized or regulated by the Financial Conduct Authority.